All right. Now, today's story is going to be on the 500. That's a lot of zeros. We've got, is that 12 zeros? That's 13 zeros. Baby. $50 billion asset manager saying Bitcoin adoption accelerating, dominant cryptocurrency on the path to rival gold. Now, for those of you who are unaware of VanEck, they are the New York-based exchange-traded fund provider, and they have $50 billion in assets under their management. And they have just released their latest report reviewing their forecast on the leading cryptocurrency, Bitcoin. Now, the VanEck report describes Bitcoin as being on the path to becoming digital gold, featuring a number of use cases where Bitcoin may have the advantages as store of value over traditional hedging assets like gold and other precious metals. Now, according to the researchers at VanEck, Bitcoin and cryptocurrency technology in general outperform gold in several key areas, including portability, divisibility, transactability, and of course, programmability. The report also highlights the accelerating adoption of Bitcoin, noting its daily liquidity of more than 1.75 billion, as well as the rising availability of mainstream means to gain exposure to the leading crypto through platforms such as Robinhood, eToro, TD Ameritrade, and the Chicago Mercantile Exchange. VanEck also describes how even a small allocation of one's portfolio to Bitcoin may dramatically improve the portfolio's performance, looking very favorably on Bitcoin's risk and return profile from 2012 to the end of 2019. Quote, Bitcoin may enhance the risk and return reward profile of institutional investment portfolios. A small allocation to Bitcoin significantly enhanced the cumulative return of a 60% equity and 40% bonds portfolio allocation mix, while only minimally impacting its volatility. Take that, Bitcoin's too volatile to invest in, naysayers. Now, the VanEck report hammers on the point of scarcity and how its main factor that will attract interest from investors over the coming bull cycles is that. As far as price predictions, the report does mention Bitcoin's stock to flow ratio, which we've gone over on the show before. It is a formula dividing the total supply of an asset by the amount produced per year. Now, VanEck claims based on their readings of this stock to flow chart, it suggests to them the price of Bitcoin could rise to about $80,000 per unit by 2021. That's $80,000 per Bitcoin. It's about a 10x from where we are currently. And the VanEck report does caution its readers, however, despite the potential upside to investing in Bitcoin, they do warn of a number of factors that could seriously harm Bitcoin's otherwise positive forecast. These risks include Bitcoin's extreme volatility and price fluctuations, the threat of cybercrime and exchange hacks upsetting the ecosystem, as well as the more remote chance that developments from the world of quantum computing could potentially expose vulnerabilities in Bitcoin's encryption scheme in the coming years. It's good news. It's good news. It's good news to begin seeing more mainstream recommendation of holding Bitcoin. Now, obviously, VanEck has a vested interest in this with the ETF. However, I digress. We know all these facts to be true. And it's just interesting as somebody who's been in the space since 2016, having these conversations back in 2016 about these things, about how Bitcoin will be digital gold and it will be accepted by mainstream finance. And, you know, everybody telling us that we're crazy back then. Heck, for the most part, still telling us we're crazy now, but we're not. Again, the world belongs to those who see the future trends. And just by being on this channel, you are one of those people. Now, the controversy, ladies and gentlemen. We'll put a link to the Twitter thread in the description after the video, but hot on the heels of the VanEck report, hailing Bitcoin's future prospects as an emerging asset set to upset gold as a store of value in the 21st century is this thread. Now, highlighted within, this is the actual Twitter thread. Now, NewsBTC actually put out an article, and within that article, it highlighted these comments made by Kraken's business development director, Dan Held. And he believes that Bitcoin's creator, Satoshi Nakamoto, always viewed his brainchild as a store of value, despite the popular belief that it was meant to be digital cash or a microtransactional medium. In this series of Twitter posts, he outlined the clues left behind in Nakamoto's forum posts, as well as the Bitcoin white paper itself, suggesting the mysterious creator of the world's leading digital asset preferred to think of his creation as digital gold rather than merely an improved version of the Visa payments network. Now, based on data suggesting that Bitcoin is largely being hoarded and held long-term, it could be said the market is clearly in favor of Bitcoin as a store of value over a payment medium. However, there are many in the space that believe Satoshi Nakamoto intended Bitcoin as a payments network, possibly capable of rivaling the likes of payment processing giants like Visa. This has been a contentious topic in the Bitcoin community in recent years and was at the heart of the scaling conflict that saw Bitcoin fork between Bitcoin and Bitcoin Cash. Now, one of the leading figures advocating this point of view was and is Craig Wright. He claims that he is in fact the Satoshi Nakamoto who created Bitcoin a decade ago before going into hiding when he became disenchanted by the libertarian and anti-government minded community that embraced Bitcoin in the early days. He claims that he has since returned from anonymity in order to restore Bitcoin to its creator's vision as a digital cash capable of handling a near limitless amount of transactions. Now, according to Wright, he never intended Bitcoin to serve as a store of value. Instead, his vision is of vast data centers supporting a blockchain with unlimited transaction capacity. Now, if the operational demands of such facilities meant that only a few could exist as centralized entities, so be it, he says. Now, among those who refute this version of Bitcoin's history is Kraken director Dan Held. And in his Twitter thread, he's highlighted several instances of Nakamoto's work wherein the creator's real motives are revealed. Held accuses the big block community of cherry-picking sentences from the white paper. He suggests that the majority of Nakamoto's work pointed toward Bitcoin's use as a digital gold. Held notes that libertarian thought throughout Nakamoto's work, examples include a clear distrust of central banking and references to the project as an effort to gain a new territory of freedom. Nakamoto also refers to gold as a collectible or commodity. Furthermore, the notion of scarcity is frequently mentioned throughout his correspondence. In this sense, Bitcoin's more typical of a precious metal. Instead of the supply changing to keep the value the same, the supply is predetermined and the value changes. As the number of users grow, the value per coin increases. Direct quote from Nakamoto. Finally, Held states that even the use of the word cash in the white paper's title is commonly misunderstood and doesn't mean it is primarily a payment system. According to Held, because Bitcoin came out of the cypherpunk community, which made several earlier attempts at digital money, their use of the word cash was fundamentally different from the way many understand and read it today. Yeah, saying cash represents a pseudonymous push payment in contrast to a credit-based system. Other cypherpunks had used the word cash in their white papers to reflect that functionality. In the end, we have to recognize that Satoshi was just one man, however, and with Bitcoin out in the wild and in the hands of the community and the world at large, what its creator intended or did not intend with its creation is no longer relevant. Bitcoin, since its release, has become a store of value, and an extremely secure one at that, with a very robust network. And this has formed what many consider a very strong base layer on which to build future success on. The Lightning Network, for instance, is a fast payment layer which is emerging, and various other layers will emerge to interoperate with Bitcoin in the future. The existing world of payment processing is entering the ring as well with traditional financial institutions, not to mention apps like Square Cash App and the coming backed mobile app, all aiming to solve some of Bitcoin's existing shortcomings as a transactional medium. But at the end of the day, where you fall on this argument rests with you. And unfortunately, I do not see this argument going away anytime soon. So it seems like we may just have to agree to disagree. So please let me know your comments in the section below. Big blocks, medium of exchange, Bitcoin, store value. What narrative makes most sense?